Hello and welcome to this wonderful Wednesday on Crypt. Oh my God, we broke below 100K, then we went to above 104, and are we finding that floor? I hope so, because we want some more upside, that is, in 2025. Now, the bankers are still being salty, and there's some really nice real-world utility coming out these days. Let's hop right into it. Boom! As I was exploring all of the back and forth around this stablecoin revolution, I came upon the Bank Policy Institute, and ding, 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 stablecoin risks, some warning bells coming from them. And in a nutshell, they break this down into two parts, saying basically that one, stablecoins can depeg. So even though it's a $1 for $1, you might end up with, say, 98 cents. Now, the second element that they talk about is that users may be putting these stablecoins into DeFi protocols, and DeFi protocols may not give them the returns that they want. AKA, boom, they blow up. But look, let's just dive into some of the things that I don't really love here. They talk about redemption risk and depegging events. Now, the reality behind this argument is that if you do want to take a single tether or a single circle and redeem that for $1 with the entities, you generally need to be a qualified purchaser. What does a QP mean? It means you're rich as all fuck. But their argument is that users have to take this dollar and they got to go to exchanges, and exchanges have fees. And if I try to withdraw $1 and I pay a 2-cent fee, I wind up with 98 cents. Bada bing, bada boom. This dollar is not worth $1. And that's kind of a shady way to phrase this. You could swap it on Base, which has a feeless system right now. Really, Coinbase is kind of covering a lot of the fees there. But I mean, there are alternate paths. And let's just say you're exchanging the dollars through a gas asset that's not one of those dollars. Well, then you'll retain it. You'll just pay a little bit of a fee elsewhere. Now, one of the other major concerns is that USDT and USDC on exchanges have depegged in the past. So let's look at USDC, for example, because when I was paying attention to this, this was actually an amazing opportunity. What happened here was that on Friday, Elizabeth Warren and Operation Choke Point 2 under Joe Biden started this cascading effect in regional banks. Somewhat ironic here that we're talking about banks, but what they did was they cited Silicon Valley Bank as insolvent, then they went after Signature, and it was this whole kerfluffle. But on Friday, Circle basically lost access to their banks, causing this depeg, which all it really required was the banks to reopen on Monday and get everything clarified. That's like the core of what this issue was. So this was an amazing event if you were here and you believe that Circle was actually a company that was going to be in business and wasn't going to be insolvent on Monday. You could just buy all of these dollars for, sub 90 cents or something, right? That's what I tried to do. I didn't have much cash, unfortunately, but it was a great trade. Sure enough, Monday came, it opened at $1, and everybody made this vig here. So that was pretty sweet. But I do think complaining about this is kind of silly, right? USDC traded below $1 around the default of Silicon Valley Bank, and the default of Silicon Valley Bank didn't need to happen. It was forced by the politicians. Signature Bank and Barney Frank, an ex-politician, came out and said, hey, you made us shut down, but we were solvent. We had the money. You just forced our hands. And so much of these complaints are around regional banks, not the too big to fail ones, having to compete with the yields coming out of crypto. So again, I feel for you. Obviously, the banks are the losers in this great change, but come on. And then lending stablecoins, risk of losses when the music stops. And this talks about how the Genius Act is backing stablecoins for payments, but what do you do when you take those stablecoins and you put them into a borrowing lending platform like Aave? So props that they're talking about Aave and Morpho. At least they're aware, at least people know that there's these permissionless lending platforms out there, but they're just discussing, well, what if a user takes their money and they put it into some risky lending scheme and that goes boom, right? Well, Aave does a lot of work to offer a meh yield in a way that is very risk off. But to tell people that this is a problem because these options that, the users are given optionality, and if they take the dumb option, they lose their money. Well, same goes with playing the lottery. Same goes with sports betting. We don't want to regulate optionality out of our system. This is absolutely insane. And it kind of goes in to the American Banking Association's flag waving over here, which says 52 state banking associations urge Treasury to uphold Genius Act's ban on stablecoin interest. Now, I've already played video of these ABA bankers being salty on stage, and their core complaint here is that the Genius Act passed, but it's for stablecoins as payments, not stablecoins as an asset that generates yield. And they want to make sure that that yield doesn't flow. But remember, blockchains are digital ledgers. Managing flow is what they do. And I can sympathize with people that are subject that are feeling the pain of this change. Again, anytime change happens, somebody's going to lose out on that, but change is the only constant. And what cracks me up is this area right here. Community banks, which play a vital role in rural and underserved areas, are particularly vulnerable to deposit outflows caused by interest-bearing stablecoins. The letter highlights that such disintermediation could result in a 25.9% loss in deposits, eliminating approximately 1.5 trillion in lending capacity and shrinking small business and farm credit by 110 billion and 62 billion respectively. But let's remember, they're talking about their users getting into permissionless on-chain stablecoins. I mean, this is an awesome opportunity for them to generate yield from the comfort of their own homes. But comically, there's Aave. So if we're talking about the loss in lending capabilities, well, they're just moving from one lender being a local bank onto something that is a permissionless protocol that anyone can access. So sure, I mean, I feel for you small banks, but at the same time, the accessibility isn't shrinking, it's only expanding. And all of this comes back to DeFi risk and all of that nature, but we need to increase our education. If finance and digital are going to go hand in hand, I mean, this should be part of the educational canon from a younger age. But of course, to say, hey, look, people can make bad decisions, so the ability to make those decisions should go away, that seems rather sketchy to me. Now, on to a different topic in the technological development around zero knowledge proofs, my jam. And let's just keep in mind, people just like to call crypto a scam, but the cryptocurrency industry is what is funding the pioneering right now in the bleeding edge of cryptography. Cryptography is very important to competition. It's very important to wars. Of course, the Enigma machine, right, from World War II, one of the biggest cryptographical innovations. And here we have Lagrange, who are excited to share that Lagrange is building an Anduril's Tech Lattice SDK. Now, what Lagrange, this zero-knowledge AI provability engine called Deep Prove. And what it wants to do is establish a few things. One, that the AI doing the work did the work appropriately. Two, that it is actually the right AI that is reporting this work is being done. And basically what we are looking at is a decentralized ecosystem of drones that might be on the battlefield. That is what Anduril is providing. We need to make sure that they are aligned, that they are anti-fragile, and that there is no corruption that can be brought in, like a Russian bot that is just screwing up the information. Satoshi's core innovation around Bitcoin and the double spend was called the Byzantine general's problem. And that is, picture this, the Byzantine general is surrounding a city. He has bases on all 4 points of the city. He needs to coordinate a single attack where they jump in and they attack all together, decentralized from all 4 points. His problem is that spies, double agents, all of these enemy oppositions could be in his ranks, changing that messaging. So if I send a message from point A to point B, hey, it's going to be noon, and the messenger is against me and he changes that to 1 p.m., well, the whole thing fails and the system collapses. That is what Byzantine fault tolerance is, and that's what Satoshi's big crack was. So they're saying, hey, look, we're not the Byzantine general surrounding a city. We are an entire battlefield full of AI-loaded drones. And when these drones speak to each other, they need to know that the information is correct. They need to know that it is one of their partner drones that is actually telling them the data, that they're not being hacked into. And of course, that they are creating an auditable trail. So when a missile is fired, there is a action that is encompassed in a ZK proof that is protected and attached to that drone. And if a third party needs to go back and say, well, what happened there? This is all verifiable on chain. This is how we move into our metasphere world, into our world full of robots, into this world where greater interactions between digital and valuable real occur, especially if we're talking about wealth and life and things of that nature. But this is a world where we see that they're enhancing security, autonomous drone ops, battlefield comms, and more. They're adding defense systems, gain verifiable guarantees that replace trust. We don't trust, we verify. Developers can plug into Deep Prove into existing workflows. So great. This is a verification layer that can be added to whatever people are building. Missions deploy faster, safer, and more accountable AI in real time. As defense AI shifts from analysis to real-time action, trusts in automated systems is no longer enough. Deep Prove is capable of delivering seamless cryptographic guarantees that would otherwise be impossible to every AI decision within open defense platforms like Lattice. So this is very cool. This is taking that zero knowledge tech. And let's keep in mind, we're in like an election season. We already have the technology now to apply zero knowledge to elections. Everybody should be able to make a vote directly from the comfort of their mobile phone. And we will be able to verify that it is only one vote per person attached to a real user ID, a proof of humanity. And we can allow access to all of that polling data in real time without revealing the identity attached to that information. And let's keep in mind, blockchain technology is a truth and trust layer to the internet. The first asset being utilized under this layer of verifiable truth is money. Obviously, we need to know that money is somewhat limited in order for it to maintain any of its value, and that's the double spend problem. So really interesting updates. It's kind of wild to see the banks start to really kick and respond. And of course, you got to give some props to the Dems for getting the crypto industry to become such a strong lobbying force in Washington, because this is going to be advantageous to their battle against the banks. But while the banks are busy fighting with the stablecoin issuers, the Circles and the Tethers of the world, let's recall that just because the issuers can't share the yield doesn't mean that the protocols can't. So things like Athena will always be able to pass along yield. With that being said, we've seen so many liquidations lately with these crazy price fluctuations. Just stop gambling with leverage. So stay safe. Don't over lever. Give me a like and a sub because it means the world to me. And as always, I will see you tomorrow.